Every empire falls, not with a bang, but with a transaction. Right now, a silent revolution is happening, not on battlefields, but in boardrooms and oil markets. Countries once terrified of US sanctions are now asking one question: why do we still trade in dollars? And if they ever stop, your savings, your investments, and even the price of your morning coffee could change forever. Because when the dollar falls, the entire world feels the earthquake. This is not a conspiracy theory. This is economics, power, and history, repeating itself. Welcome to FinInsights Daily, where we decode money, power, and the systems that rule the world. Today we're going to uncover how the US dollar, once untouchable, could be standing on the edge of its greatest challenge yet. From the rise of BRICS to the digital yuan, the world is quietly building a new financial order. And if you think it won't affect you, think again. To understand how the dollar could fall, you first need to understand how it rose. After World War II, the US was the only major nation left standing. The Bretton Woods Agreement made the dollar the backbone of global trade. Every currency was tied to it. Gold backed the dollar, and the dollar backed the world. For decades, it was a symbol of stability, trust, and dominance. But power always comes with debt, and debt always demands a price. In 1971, President Nixon did something unthinkable. He removed the gold backing from the US dollar. Overnight, the world's money became paper, backed only by faith. That's when inflation, oil crises, and global manipulation began. Yet the dollar stayed strong, not because it was perfect, but because there was no alternative. The US learned to weaponize the dollar. Sanctions, trade dominance, and global loans kept other nations in check. But now, that weapon is backfiring. Fast forward to today. Nations like China, Russia, India, Brazil, and South Africa are forming an alliance, not for war, but for money. They call it BRICS. Their goal? End dollar dominance. They're trading oil in yuan, signing deals in rupees, and even developing a new shared currency backed by real commodities, not debt. The message is clear. If the US can freeze your money, then you need your own system. For the first time in 80 years, the world is saying no to the greenback. The US isn't watching quietly. Behind closed doors, it's pushing back with AI-driven trade algorithms, military influence, and financial deals disguised as partnerships. But history tells us every empire that tries to control money through power eventually loses it through trust. Rome had gold, Britain had the pound, America had the dollar. Now the world wants something new. Imagine this. Saudi Arabia announces it will sell oil in Chinese yuan. Russia and India agree to trade energy in gold-backed digital tokens. Suddenly, global demand for US dollars drops. The Federal Reserve keeps printing more money to sustain debt. Inflation skyrockets. Investors flee to commodities and crypto. The stock market falls, and ordinary people watch their savings lose value, fast. Sounds dramatic? It's already started, just not evenly distributed yet. In this new world, power won't belong to one nation, it'll be shared. A multi-currency system is forming, where BRICS, digital assets, and stable coins all coexist. The dollar won't vanish overnight, but its throne will no longer be absolute. It will have to compete, something it hasn't done in almost a century. The question is, are you prepared? Every economic shift creates losers and winners. The last century made America rich. The next one might belong to those who understand what's coming. If you want to stay ahead of that change, this is where you start. Subscribe to FinInsights Daily and don't just watch history, profit from it.